Welcome back to Explain the Charts, your go-to channel for in-depth market analysis and chart breakdowns. Today, August 4th, 2025, we're putting Intel Corporation stock under the microscope as it navigates a period of profound change and intense market skepticism. Recent headlines are dominated by Intel's strategic pivot towards artificial intelligence and an aggressive restructuring plan, including the significant spin-off of its network and edge group into a standalone company. The company has also initiated substantial cost-cutting measures, such as a major workforce reduction and the termination of plans to build new chip facilities in Europe, signaling a strategic shift towards leaner operations. However, the market's reaction has been largely subdued, reflecting underlying concerns about Intel's ability to regain its leadership in the competitive semiconductor space, particularly against surging rivals like NVIDIA. Reports consistently point to years of past mismanagement and a limited presence in the high-growth AI market as persistent challenges that have eroded investor confidence. Their foundry business, crucial for future growth, also faces considerable risks, with the success of advanced manufacturing processes like 14A potentially hinging on securing a major external customer, which could ironically deepen reliance on rival TSMC. Analysts are largely cautious, maintaining a consensus hold rating and an average price target around $22.17, underscoring the mixed but generally apprehensive sentiment surrounding the company's prospects. Looking at the daily chart of Intel, the overarching trend for the past year has been undeniably bearish, clearly characterized by a persistent downtrend across multiple quarters. The stock has consistently failed to establish sustainable higher highs, instead forming a discernible series of lower highs and lower lows, which is a classic indicator of strong selling pressure and a fundamental lack of conviction from buyers. This long-term chart visually confirms the narrative stemming from recent news, reflecting both deep-seated operational issues and widespread investor apprehension. Noticeable volume spikes often accompany significant downward price movements, particularly after negative announcements, suggesting periods of intense institutional exits and broader market capitulation. The journey from over $40 in March 2024 to current levels clearly illustrates the severity of this sustained decline. Let's narrow our focus to the crucial period from late July through early August 2025, a timeframe that has seen INTC stock experience a particularly dramatic and news-driven decline. On July 24th, following what was widely described as a disastrous Q2 2025 earnings report and a terrible earnings call, the market reacted swiftly and unequivocally negatively. The very next day, July 25th, the daily candle shows a massive gap down, plummeting sharply from an open near $22.60 to close at $20.70, representing a significant single-day loss. This sharp drop was accompanied by exceptionally high trading volume, underscoring the intensity of the selling pressure and widespread investor disappointment in the financial results. The bearish momentum continued unrelentingly into the final days of July and the first day of August, with Intel closing lower for several consecutive trading sessions. By August 1st, the stock had fallen to $19.31, hitting fresh multi-year lows, a level prominently highlighted in recent financial news as indicative of its significant decline. This breakdown below the critical $20 psychological level, which had offered some transient support earlier in the year, is a particularly strong bearish signal that implies weakness. It suggests that many investors who bought into any prior bounces in the $20 to $21 range are now substantially underwater, potentially leading to further selling as they are forced to exit positions. The consistent downward movement on high volume clearly indicates that sellers are in firm and aggressive control of the market at these depressed price points. This price action aligns directly with recent reports of ongoing layoffs, lukewarm analyst sentiment, and the company's struggles to differentiate itself in the AI hardware race. To grasp the immediate, granular dynamics during this recent slide, let's switch to the 15-minute chart, specifically examining the intraday price action on July 31st and August 1st. On July 31st, We initially observed Intel attempting to consolidate around the $20.20 to $20.30 range in the early hours before the main market open, showing some stability. However, once the primary trading session began, selling pressure quickly mounted, decisively pushing the price down below the $20 mark with increasing velocity. The repeated formation of short-lived green candles, indicating minor bounces, immediately followed by strong red candles, perfectly demonstrates the underlying weakness and a pervasive lack of buyer conviction throughout the day. Moving into August 1st, the bearish momentum clearly persisted, with sellers seizing control right from the open and aggressively pushing the price down in the very first few 15-minute intervals of trading. Notice the series of long red candles accompanied by high volume in these early trading hours, which strongly indicates heavy selling as the market continued to fully digest the ongoing negative news and outlook. The stock momentarily found minor intraday support around the $19.10 to $19.20 area, but any rebound from these levels was notably shallow and quickly faded, indicating a strong overhead resistance from eager sellers. For active day traders, this rapid price decay and the lack of sustained recovery highlights the critical importance of setting tight stop losses and carefully avoiding prematurely attempting to catch falling knives in a strong downtrend. The constant stream of lower highs and lower lows on this highly granular time frame emphatically confirms that intraday bullish attempts were consistently overwhelmed by persistent selling forces. This detailed 15-minute view starkly emphasizes the current fragility of INTC's price, characterized by quick shifts downwards and a pronounced absence of significant rebound strength. While our most recent one-hour data doesn't capture the very latest July/August plunges, it still offers valuable insights into INTC's typical intraday volatility and trading patterns from earlier in July. Looking at the one-hour chart from July 15th through July 18th, we can observe distinct periods of consolidation and sharp movements, even before the catastrophic earnings report. On July 15th, after a morning surge, the stock faced significant selling pressure in the afternoon, forming a long upper wick on one of the candles, indicating strong resistance near $23.78. This suggests that even during periods of relative stability, upward momentum was often quickly thwarted by sellers stepping in at higher price points. The next day, July 16th, showed a continued grind lower, with temporary bounces failing to reclaim previous levels, further solidifying the prevailing bearish sentiment. This consistent rejection at overhead levels, even on a granular hourly chart, is a characteristic of a weakening stock. For active traders, these patterns emphasize the importance of identifying short-term resistance and being cautious about buying into initial bounces, especially when the underlying daily trend is down. Volume distribution across these hourly candles can also provide clues, with larger volumes often accompanying down moves, confirming strong selling conviction. Understanding these intraday tendencies is crucial for setting entry and exit points, as they often foreshadow the larger daily movements. Even in mid-July, the hourly chart showed that rallies were not sustained, setting the stage for the later earnings-driven decline. Returning once more to the broad daily chart, let's identify critical price levels that will dictate INTC's trajectory in the coming weeks and months, and frame our overall outlook. The most immediate overhead resistance now stands firmly at the $20 to $20.50 range, a pivotal psychological and technical zone that previously offered support but is now acting as a strong ceiling. Any attempt to reclaim this level would be an initial positive sign, but it will undoubtedly require substantial and sustained buying volume to break through decisively. Looking higher, the current analyst consensus price target of $22.17 serves as another major resistance point, influencing both institutional and retail investor perceptions. Further strong resistance can be anticipated around the $23 to $23.50 levels, reflecting previous consolidation areas and repeated failed breakout attempts earlier in the year. On the downside, the current price hovering around $19.31 is actively testing immediate support at the recent lows established by the earnings-driven sell-off. A decisive break below $19 would open the door for a retest of critical historical support levels, with the $18.50 area from September 2024 as the next crucial line in the sand to watch closely. Should that fail to hold amidst continued selling pressure, Intel could potentially slide further towards the $18 mark, a price level not seen in a very long time, possibly indicating a return to its multi-year lows. From a long-term investment perspective, the reasons to be bearish are reinforced by Intel's persistent market share challenges, its perceived lag in the cutting-edge AI chip race, and the intensely competitive landscape in the broader semiconductor industry. Their recent financial performance, despite necessary strategic shifts, has yet to show consistent and compelling improvement, leaving long-term investors justifiably wary and seeking clarity. However, a potential long-term bullish outlook, albeit speculative, hinges entirely on Intel's successful and rapid execution of its ambitious AI strategy and the eventual profitability and value creation of its spun-off entities, such as NEX. The current cost-cutting measures, while undeniably painful in the short term for employees and operations, could potentially streamline the company and significantly improve future margins over a multi-year horizon, making it a more efficient enterprise. But for now, the market remains unconvinced, prioritizing immediate financial results and demonstrated competitive positioning over future promises. To summarize our analysis, Intel is currently trading at approximately $19.31, a price point that reflects considerable bearish sentiment following its recent Q2 earnings report. Key immediate resistance levels for any potential price bounce are identified at $20 to $20.50, and the analyst target of $22.17 will act as a stronger barrier. Critical support levels to watch closely are the immediate $19 to $19.30 zone. If breached, historical lows around $18.50 and potentially $18 become the next downside targets. Our unbiased prediction for Intel in the short to medium term is a high likelihood, approximately 70 to 80%, of continued downward pressure or sideways consolidation at these depressed levels. The stock may very well retest or even decisively breach the $19 support, making a move towards $18.50 or $18 quite possible. This bearish outlook would be strongly reinforced by any further negative earnings surprises, continued market share erosion from rivals like NVIDIA and AMD, or setbacks in their strategic restructuring efforts. Conversely, a significant bullish reversal is considered less probable in the short term, perhaps with a 20 to 30% chance, and would necessitate a series of strong, tangible positive catalysts. Such catalysts could realistically include a major breakthrough in AI product adoption that translates into unexpected and substantial revenue growth, a highly anticipated new foundry customer announcement for their advanced processes, or a clear, sustained positive shift in overall semiconductor sector sentiment. For active traders, it remains crucial to look for strong and persistent buying volume on any upward price movements, as current rallies often appear to lack conviction and quickly dissipate. Keep a very close eye on Intel's official newsroom and investor relations announcements for updates on their AI initiatives and the detailed progress of the Network and Edge Group spin-off, as these could fundamentally alter the investment picture. Always be mindful of broader global economic conditions and the overall performance of the tech and semiconductor sectors, as these external factors can either amplify or mitigate INTC's individual trends, impacting trading decisions. Remember, trading against the established downtrend in a fundamentally weak stock like Intel, especially during periods of negative news, carries a significantly elevated level of risk.